Good morning, everybody. Welcome into another one. It's Sunday, baby. It's been a crazy week. Obviously, not a great day here in the crypto market. But look, we're going to do things a little bit differently today. Okay. We're going to do things a little bit differently. I know usually we start the stream, I'll be like professional, politically correct. And then after about 30 minutes, I get a little unhinged. That's usually how this goes. But we're going to do things a little bit differently today. I have a surprise for those of you on the YouTube channel, on the X, everywhere. And I think we're going to be excited. So if you're ready, let me know. Put a 1 in the chat just so that I know the audio sounds good, video looks good. Let me know that everything looks good. And then we're going to go ahead and get started. I'll kind of tell you guys what I have in store for you today. It is a little bit different. Again, I'm just going to warn you, a little bit different, but I think that you guys are going to enjoy it. One. Okay, baby, sounds good. All right, let's get into it. So what are we doing today? So I'm sure by the title, you can see something looks a little odd. It says Super Sunday number 13. Tyler, what's Super Sunday? Well, over in the crypto school, we have something called Super Sunday. Okay. And if you don't know what the crypto school is, the crypto school is quite simply just a platform that myself, Connor Kinney, and a few other creators developed to teach people about crypto. We basically just said, you know what? Everything we know, we're just going to put it in here. So there's courses, there's classes, live stream, there's coaching. I mean, there's everything you can imagine, which I'll shill you on later. Don't you worry. And every Sunday, what we'll normally do is we'll do a live stream with myself or other coaches. We'll do a workshop, etc., where we just give back to the community. So we'll do a giveaway. We'll teach people stuff. We'll go over the market. We have a roundtable. And that's what we're going to do today. Okay. So I'm just making sure that everything looks good. Looks good. Okay. Looks good. So what we're going to be doing is we're going to make the Crypto Schools Super Sunday. This is number 13, by the way. We're going to make it live for all of you to see. Now, Tyler, why are you doing this? Let's be honest. Okay. Why are we going to do this live? Because again, usually this is behind closed doors. This is usually something that we just do over in the school on itself. Why are we doing that? Well, we have a couple of reasons. Okay. I'm going to be honest with you. Reason number one is that this market absolutely sucks right now. It's been incredibly hard of a market for people to be able to navigate in. It's been very difficult. And I was like, you know what? I want to do something. I want to give back to the community a little bit. I want to take this kind of public and give the community value. We're going to do a workshop today. We're going to do a roundtable today. We're going to do a lot of stuff today, guys. It's going to be about an hour, but it's going to be a fun ass hour. Okay. And then obviously there is another benefit to that as well. There's another side of it. I'm never going to lie to you guys, in which hopefully you guys see what we're doing in the school. You see just how fun it is and how cool it is and all the stuff that we have going on. And you guys are like, if you, 1 second, just want to make sure that I'm good here. Okay, I think we're good. Let me know if we're okay. Let me know. I think we're good. I've been having Wi-Fi issues with the freeze, but anyway, hopefully, if you guys do think that it's cool, if it seems that it's interesting, it seems could be valuable to you guys, you checked out the school, you join the school. So there's a mutual benefit there, and hopefully that's something that's good. Okay, so what is it that we're going to be doing today? And if the Wi-Fi does go down, please let me know in the chat immediately. Okay. So what are we going to do then? Well, this is how we normally will shape out Super Sunday. Okay. The first thing that we do is a workshop. And during the workshop, what I'll do is we'll go over something. We'll teach something. That's what we always do. And today I'm going to be doing that. I'll be hosting the workshop myself. It'll either be me, it'll be one of the other coaches. There's like 8 of us, and one of us will do a little bit of teaching. Now, in addition to that, what we're going to then do is it's going to be followed by a roundtable. Well, I'll bring on a bunch of the other coaches from the school. We'll talk about what's happening in the market. We have a lot to talk about right now. Okay. So we'll talk about what's happening in the market. We'll maybe look at some charts. We'll kind of give opinions. I'll ask them some questions, whatever it may be. And then following that, once you've heard the workshop, once you've heard the roundtable, we're going to open it up to you guys where you can ask us whatever you want. And by whatever you want, I literally mean whatever you want. Just let us know whatever you want, and we'll answer questions for you. And then at the very end, we're going to be doing a giveaway, okay, in which we are going to be giving away money to you live viewers. So it's going to be fun. Again, a little bit different than what we usually do, but we do this every single Sunday. It gives the community a chance to learn, interact with the coaches, see our opinions on the market. There's the coaches who are going to be in this. I mean, these are guys accumulatively made millions of dollars here in the market. So you get to get insight into exactly how we're feeling about this and much more, all for free today. Okay. So hopefully you guys do enjoy it. But without further ado, baby, no more yapping. Let's get straight into it. Okay. So first and foremost, as I mentioned before, we're going to be doing a workshop. And Tyler, what are we doing a workshop on today? Let's hear it. Okay, great. I'm just going to pretend you just said it. Well, today we're going to be doing a workshop on liquidations. Okay. And this is something I've hinted at a lot recently, just because liquidations in crypto, I think, are one of the single most important things that you can pay attention to. It's the reason why I talk about them all the time. It's the reason why I post about them all the time. It's the reason why I try to teach you guys about them all the time. I believe once you understand liquidations and you genuinely understand why they happen, how they happen, who causes them, who wins, who loses. Once you understand that, your perspective on this market will change almost immediately. And hopefully by the end of the next 20, 30 minutes, you guys have a full, deep understanding of liquidations, knowing exactly how they work, what they are, and much more. Okay. And so today, that's what I'm going to do for you. Now, I'm not going to do some big, crazy, fancy presentation because honestly, I don't like learning that way. If I'm going to be 100%, I don't like learning that way. It feels a little bit too planned. It feels a little bit too scripted. Whereas what I prefer to do is just to talk to you. And if that's okay with you guys, let me know in the chat. Give me a 3 in the chat if that's okay. If I can just talk to you and explain to you how these liquidations work, what they look like, who benefits from them, who the winners are, who the losers, who causes them. I'm gonna give you everything. Okay, but it'll just be a bit more of a conversation. And if you want a big fancy presentation, I'll give you guys one in the future. Okay. So 3. Okay, great. I'm glad we're on the same page. So let's get into it. Okay, let's get into it. Let's just jump straight in. So, what is a liquidation here in the world of crypto? What is a liquidation in the world of crypto? Because you hear it all the time, I'm sure. You've maybe seen this before also. Let me pull this up real quick. I'm sure you've seen this before. Y'all ever seen this chart? This? Or maybe you've seen this one. You've seen this stuff? These are liquidations. Okay, those are liquidations. So whenever people talk about liquidations or you see that chart, that's what they're talking about. They're talking about liquidations, right? And what are they? So let's first and foremost start there. What is a liquidation in crypto? So liquidations are when leverage traders lose everything. The easiest way to explain it, a liquidation occurs when a leverage trader loses everything, but it's not that simple. So let me give you a scenario. You're a trader and you have $100. You want to use that $100 to trade. You have a couple options. You can either just use that $100 to trade. You can open up a 100x spot buy, which means that you just buy Bitcoin for $100 and just try to go up, right? Or hope it goes up, right? You can open up, that's really all you can do from that perspective. Or there's another option that you have in which you can basically borrow money or you can leverage trade, which is what it is. You're taking out loans, right? And the way this works is you'll go to an exchange typically, and you'll go to that exchange and say, hey, I have $100 that I'll put up as collateral. I want to use this $100 to borrow $500. I'm going to use your $500 to trade. And if I win my trade, I'll give you your money back and you'll also make money on top of that from fees. And if I lose, don't you worry. You can just take my collateral. So you won't lose money, Mr. Exchange. I'm just going to risk losing all my $100, but I'll take on some possible upside. The exchange says, okay, yeah, sure, we'll do that. But I'm letting you know now, yeah, if you lose this trade, you're losing the money we loaned you. We're taking it back. And we're also going to take that money that you put up as collateral. So just understand, whatever collateral you put up, gone. And the trader says, okay, yeah, sure, that's fine. We'll do that. So the trader puts up $100 as collateral, borrows $500, and then they look at the market. They look at Bitcoin and they say, okay, Bitcoin's at 100,000. Would be nice, right? Hypothetical though. Bitcoin's at 100,000. I want to bet that Bitcoin goes from 100,000 to 110,000. That's my goal. I think Bitcoin's going to go from 100 to 110, and I'm going to make money because I'm going to bet that it's going to go up. And that's the goal. So boom, they open up what's called a long trade, which is when you bet, again, that the market's going to go up. Well, the exchange says, hey, great, cool. Yeah, you think the market's going to go up. But if you're wrong and Bitcoin goes to hypothetically $93,000, remember, I'm taking all my money back. And I'm taking that collateral to cover my own losses because I loaned you money and you lost some of it. So I'm taking that collateral to cover my ass. And the trader says, okay, cool. So the trader opens up the trade at $100,000 and Bitcoin goes up 101, 102. And then as trading goes, it goes 101, 199, 98, 97. Oh, maybe there's hope. It goes 98, 99, 100. Then it falls all the way to 93,000. And as it hits 93,000, that position immediately closes. All the money that the trader borrowed is gone. And the collateral that the trader, the $100 that he put up, is also gone with it. And that trader lost everything. $93,000 is the liquidation level. The act of him losing everything was the liquidation. Does that make sense? So when you get liquidated, you lose all the money that you borrow. You lose all the money that you put up as collateral. The liquidation level is the level in which that event occurs. Let me know if this makes sense. Put a yes in the chat. I need to make sure you guys are following me here because I'm going to go further than this. So that's how that works. Yes. Okay, great. So that's how it works. It gets a little bit more complicated than that. You get the point. Now, you may say, Tyler, Why does it matter that we watch where people get liquidated? Because when we're talking about liquidations are so high right now, what we're saying is that maybe, for example, underneath Bitcoin, so let's say Bitcoin's at 100,000. If we notice that a lot of people will get liquidated at 98,000, it's extremely important to watch it. And I want to answer the question because you might say, why? Why is it so important that we watch where people will be liquidated? Because that's where the people who manipulate the market, that's what they want to happen. The people who manipulate this corrupt ass market want traders to be liquidated. And so, naturally, what will happen is this market will oftentimes move in the direction in which the most people will be liquidated. So, if a lot of people are taking on that hypothetical example of betting that Bitcoin's going to go up, therefore they will be liquidated if it goes down, the market manipulators, those corrupt ass lizard people, they're going to want the market to go down to liquidate those traders. So when you're a trader, you need to know where will people be liquidated because now the market has an incentive to go in that direction. So let me bring this back. Let me peel back this onion one more time. When a trader is so wrong that they lose everything, that's called being liquidated. Those liquidations occur at a specific level. The people who manipulate the market want the market to hit that specific level because they benefit from it. Now, naturally, you guys will say, why the I'm not going to go that far. We'd like to stay monetized here at the crypto school. Why the world would they want us to be liquidated? I mean, that doesn't even make sense. Like, wouldn't the people who are in charge of the market want us to win? No. I don't know what world you live in, but the world we live in, guys like us aren't supposed to win. Retail's not supposed to win. But it goes deeper than that because there are actual tangible objective benefits that people behind the scenes have and incentives that they have for people to be liquidated. Let me explain to you. So when you get liquidated, there's 2/3 parties that really benefit from it. Centralized exchanges, market makers. And the reason I paused there, you can also say decentralized exchanges, but not really. So we're just going to stick to centralized exchanges, okay? But anyway, centralized exchanges, market makers, and big ass investors like whales, okay? Big whales. Those three, they all benefit at the detriment of retail when retail gets liquidated. Let me explain how. Centralized exchanges, how do they benefit when you get liquidated? In a couple ways. The first way that they benefit from when you get liquidated is that they generate a fee. They earn a fee on your trades no matter what. So when you buy and when you sell, when you long, when you short, when you open a position, when you close a position, centralized exchanges earn a fee determined by the size of that trade. So the bigger the trade, the more the fee, the more money that they make. Now, it doesn't all go to them, but a lot of it does, right? So think about this. If a trader gets liquidated and their position is forced to close, meaning that exchange is going to sell that position, what is that called? That's called a transaction. And if an exchange earns on transaction, that means that when that trader gets liquidated, that exchange earns money even though they took no risk. So think about this. The exchange gives you money for you to take on a trade. Your trade goes south, they take their money back in that collateral, so they don't lose anything, and then they make money on the fee that you paid when they closed your position. No risk, all profit. So every time someone gets liquidated, they make money, and it's a forced trade. They can force you to close that position because you took money from them, you borrowed money from them, and they didn't risk anything. So a centralized exchange makes money in that way. They also make money in another way. I'm going to explain that in a second, but I'm going to skip past it for now. It'll make sense in a second. Now, there's market makers. These are the mother effers of the market, okay? These are the ones that really make money whenever you get liquidated. Now, in order for me to explain this, I'm going to get a little technical, but I'm going to try to keep it as simple as possible. And also, one thing, if anyone has just joined, remember, what we're doing right now is called Super Sunday. This is something we usually do in private over in the crypto school. We decided to make it public today. Welcome in. Now, market makers. What is a market maker? Okay, I'm going to try to explain this as simply as possible. Market makers are intermediaries. They make the market. They're the ones who are going to be buying crypto from people and selling it to other people in very simple terms. Because, you know, what a lot of people think is that in crypto, when they go on an exchange, when they press buy Bitcoin, for example, they think they're buying it directly from another person, but it could be peer-to-peer, but it's usually not. Usually what happens is that, for example, if I want to sell my Bitcoin, one Bitcoin, I'm going to go on an exchange, I'm going to sell Bitcoin. Do you notice how it always just immediately sells? It's because you're not waiting for another person on the other side to buy it. No, oftentimes a market maker buys it from you and then they sell it to another person. And so that makes things fast. There's always liquidity. There's always someone in the middle to buy it from you, then sell it to another person. It's like a flipper, basically. That's kind of what they do. And it gets a little bit more complicated than this, but I think you get the big picture. There's an intermediary there. Now, market makers make money on spread. So what they'll try to do is they'll say, okay, Tyler wants to sell his Bitcoin at 99,000. I'm going to buy it from Tyler at 99,000 and I'm going to go try to find someone who'll buy it for 100,000. And if they do that, guess what? They made $1,000. Now, naturally, they have their own risks, and so they have to hedge those risks because think about it. If they buy that Bitcoin from me at 99,000 and it goes to 80,000, whoo, baby, we're in trouble, right? And that's why market makers go down so often whenever the market drops, because if they can't get out of that position fast enough, their spread goes negative and GG, over with, right? But they're good. They're really good. They don't let that happen. Now, they also can sometimes hedge their positions with short trades. I'll explain that later. No, I won't. Not today. One day. Now, knowing this, okay, so market makers buy it from you and sell it to someone else for a higher amount. That's their goal. Think about this. When the market starts falling and someone gets liquidated, it goes really down. Boom, 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 really down. And people start getting liquidated. And the centralized exchanges have to start selling those positions out. A market maker can go in and buy in those moments. They're just buying because they're scooping it up. They know that this is a liquidation cascade and that the market is just falling because people are just getting liquidated. It forces more people to close, which gets liquidated, forces people to close. The spot sell gets liquidated. And these market makers buy. And they hold it. They hold it real tight. And then while the market's falling, a bunch of traders start betting that it's going to fall. They're like, oh, short the market. It's going to go down. It's going to go down. It's going to go down. So all these traders start betting it's going to go down. So what happens is now they can be liquidated if the market goes back up. So these market manipulators push the market back up to liquidate those people who jumped on the train betting that the market's going to go down. And as these market manipulators push the market back up, guess what happens? Those market makers who bought that crypto at the low, now they make a spread. Because as the market starts going up and squeezing out those shorts, now all the assets that they bought in those lower prices, they can sell for higher and they get out. And it's this constantly repeating cycle, and it's called volatility spread. Because in volatility, there's higher highs and there's higher lows. And when there are higher highs and higher lows, there's a higher spread for market makers to make money. And so it's a nasty game. Because a centralized exchange can push an asset's price down, liquidate an investor or liquidate a trader. As that trader gets liquidated, the market maker will buy that position or positions in that time where the market's down. The market starts to reverse because everyone bets that it's going to go down. It starts going back up. And now all the people who bet it was going to go down, it goes back up. The centralized exchange closes down their trades. Now they earn money on that liquidation fee as well and the trade fee. And the market maker sells on the high. And now they just earn the spread. Centralized exchange won, market maker won, retail trader lost. It's a crazy game. It's a crazy game. Now, in addition to that, I told you there's a third person who benefits from this, and these are funds. So funds can also benefit because funds, if in the know, can go in whenever there are big liquidation events. They can buy the lows. And when the market starts to go back up to liquidate the short traders, they can sell into the highs and use them as exit liquidity. So can centralized exchanges. So can market makers. And so they can earn money from just spot holdings. Centralized exchanges can earn money on the fees. Market makers can earn money on the spread. And funds can earn money on the price action. And so they're beating your ass as a retail trader and making money while they do it and taking very little risk. It's a crazy game. So for those of you who wonder, no way, they want you to be liquidated. Yeah, they do. Yeah, they do. It's a nasty game. And I tell you guys all the time, this market is designed for you to lose, and that's why. They're incentivized for you to lose. And the sooner that you understand that, the better you can be as a trader. Now, there are ways that you can win in this, because I know many of you are wondering, well, what the hell? How do I avoid this? Well, there's a couple ways. One, you can never leverage trade. If you never leverage trade, you'll never be liquidated. The problem is, people always say this. Well, the market manipulation and corruption won't affect you if you never leverage trade. Yeah. Do you remember October 10th? All those people who had spot bags that watched their shit crumble out of nowhere? Yeah, the price action can still impact a person who's not open to leverage positions. Of course it can. So you can't avoid it. You just got to be okay with it and recognize that it's a part of the game. Now, there are tools, though, that you can use in order to mitigate the losses or prepare for the fuckery. Gonna lose monetization there. It's all good. So I'm going to say it again. You can prepare for the fuckery that comes from the liquidation events and from the liquidation cascades. Now, one of the best websites that you can use, this is not a sponsor, by the way. It's just a website I use. It's called CoinGlass. So CoinGlass gives you the ability to see where the liquidations will happen. And remember, if you can see where the liquidations will happen, you can have insight as to where the market is incentivized to go. Remember, they want you to be liquidated. So the market is incentivized to move in the direction in which the most liquidations are available. So look for them and prepare for them. Let me show you. So what I'll do is I'll go through some of the different options of tools that you have here, starting with the very first one, which is liquidation history. So liquidation history is basically just a historical map. It shows you where people have been liquidated and how much people were liquidated for. So, for example, if we go back to October 10th, y'all remember that day, the 1010 crash? You see these little bars. The red bars to the bottom side are the amount of people who are short traders who are liquidated. The green bar is long traders who are liquidated. Remember, long traders bet the market's going to go up. Short traders are people that bet the market's going to go down. Well, look at this. So this gives you the ability to go back to like October 10, the 1010 crash, and see what happened. And you can see that 16 billion, we're talking like billion dollars worth of long trades got liquidated, which is the biggest in history, by the way. And 2 billion worth of short trades were liquidated that day as well. So you can use the liquidation history chart just to kind of see where people and how many people were liquidated in what areas. So for example, if we just get rid of 1010, you can kind of see a bit more accurate picture. So I would look at this, and this is like recent history, and I would say, okay, like recently we've seen a lot of long traders get liquidated. And why is this important? Well, usually when a lot of long traders get liquidated, it's a sign that some sort of bottoming out can be happening. Not a bottom, but a bottoming out, right? Generally, market bottoms happen after long traders get liquidated. It's just kind of how that goes. And so you might want to look for something like that. So you can use the liquidation history to see historical data as to how many people got liquidated. If you're learning, if you feel like you've learned something today, please put a 5 in the chat. I would really appreciate it. Now, you can use this top liquidation events. Top liquidation events will tell you the amount of people who got liquidated on certain big events. It's just, you get it, like the biggest liquidation events. It's pretty simple. So for example, you can see 1010 was the largest liquidation event in crypto history. $19 billion worth of liquidations happened, allegedly. I think it was more than that. 16 billion longs, 2 billion shorts, 1.63 million liquidated traders. Fuck, crazy, man. And Bitcoin amplitude, which I'll explain in a future video, is at 17.26, which is pretty high. Not crazy high, but pretty high. And then it'll explain the event, like what happened. And you can see a lot of the biggest liquidations actually happened in 2021. You know what's crazy? A lot of people think that the market manipulation just started. Oh, no, baby. Liquidation's been happening a long time. Years here in crypto. Look how many of the biggest ones that have ever happened were in 2021. Crazy, right? Now, liquidation history heat map. This one's pretty interesting. This will show you assets on this side and dates on this side. And what it allows you to do is say, like, okay, on January 26th, what took the most liquidations? Oh, Bitcoin got liquidated, ETH got liquidated. So you can see that a lot of the biggest liquidations generally happen in the top couple cryptos here. It's pretty interesting. Now let's get into the fun stuff. So here's the liquidation map, the good old notorious liquidation map that I'm sure you've seen a million times. What does this liquidation map do? It shows you the levels in which people will be liquidated. Remember, a liquidation is an event that happens in which a trader loses not only all of the money that he borrowed, but the money he put up in collateral. The liquidation level is the level at which that event occurs. And so what you can see on the Bitcoin exchange liquidation map is a couple things. On the right side and the left side, the y-axes, I don't know. Anyway, you can see the total amount of liquidations that will occur at a certain level. At the bottom, you can see a price. And at the top, you can see the asset. So what does this show? This means that we're looking at Bitcoin. Okay. This says the time frame. So within the last 24 hours, based on the people who opened a trade in the last 24 hours, these are the people who will be liquidated. Smart thing to do, always go about as far out as you can. It'll give you the clearest picture that you can. Okay. Because if I only look at the people who've opened trades in the last 30 days, or if I look at the people who've opened trades in the last 7 days, it's important. But until you're good with liquidation maps, just start zoomed all the way out, or just start at like 90 days or something like that. It'll give you the best picture. Okay. Now, what am I looking at when I see this? So you see this red line. This red line represents Bitcoin's price. Now, if I change this to say Ethereum, that would represent Ethereum's price. If I change it to say Solana, it represents Solana's price. But it represents Bitcoin's price in this instance because Bitcoin up here. And if you follow that red line down to the bottom, you can see that it represents Bitcoin's price being at $77,785. You can also see that right here. So anything to the point, sorry, I read a funny comment. Anywho, so on the right side, anything that goes to the right of this red line are the liquidation levels that are above Bitcoin's current price. And this is going to get a little technical, but I need you to follow me closely because you really will understand this. Okay. Meaning, these are the levels in which short traders will be liquidated if Bitcoin goes up. Why? Because remember, short traders bet that the market's going to go down. So if the market goes up, they get liquidated. These are the levels in which they will be liquidated. For example, if we come out like this, let's go right here. At $91,961, there will be $8.68 billion worth of liquidations. That's what this says. Tyler, how do you know? I can't move my mouse because you won't be able to see it, but look under my mouse to the right. You see the 91,961? That's 91,961. Under that, you see cumulative short liquidation leverage. That shows the amount of leverage that will be liquidated if Bitcoin's price goes up and goes up to that level. It'll have wiped out over $9 billion worth of liquidations, or $8 billion. And so you can see individually how many cumulative liquidations will occur at certain levels. Now, the better thing to do, though, is just to look at this as a whole. Because if I just look at this as a whole, what I can clearly see is, based on the traders who have opened up trades in the last 90 days, mostly everyone will be liquidated if Bitcoin goes back up. So do you see how there's way more liquidations to the right than there are to the left? That means there are way more people who would be liquidated based on 90-day trade opens. More people will be liquidated if Bitcoin goes up than down. And that's important to know. Why? Because remember, again, the market is incentivized to move in the direction of the most liquidations. It doesn't have to. For example, we could go to absolute war with Iran and crypto could just crash. So it's not the end all be all, but you understand where the incentive at. And the incentive is at. Where are the people who are manipulating and corrupting this market? Where do they want it to go? In this instance, the answer is up. Now, funnily enough, maybe 2 weeks ago, 3 weeks ago, this chart was opposite. There were way more liquidations to the left of the red line than to the right. And I warned people. I said, hey, guys, listen, there's a lot of liquidations below us. There's a deep, deep density of volume of liquidations below us. Be careful. We might crash soon. And the market wanted those liquidations, man. And it came down to get them. That's what happened. So when you look at the liquidation map, it'll tell you based on a certain time frame where the most amount of liquidations would occur. And in this instance, it means up. More people will be liquidated if the market goes up. Now, a lot of you may say, oh, Tyler, well, doesn't that mean that we should buy it right now because it's going to go up? Kind of, but no, it's not that simple. Yes, historically, moments like this are good buying opportunities if you have a long enough time horizon. But what you have to understand is that it could take a long time for it to actually happen. And the reason why it could take a long time is because the lower down we go, the more liquidations to the upside there will be, because the more short traders will get confident and start over leveraging. So the real incentive right now could be to push Bitcoin's price even lower to get more liquidations above us to then go back up. So it does not mean that we're immediately going to go back up, but it does mean that eventually we probably will, because there's an incentive too. So if you're willing to buy now with a long enough time horizon, very likely you win some freaking trades. You just got to be willing to ride out the roller coaster that could be in front of you. So that's the liquidation map. Let me know if that's useful. Now, the next thing that you can look at is the hyperliquid liquidation map. This is going to go more into decentralized exchanges. I'll explain this in a future video. Very similar, though. Works about the same way. And the last thing that you're going to see today in terms of tools is the liquidation heat map. And I know I'm going a little bit over my time here, but I really hope you guys are enjoying this, okay? What does the liquidation heat map do? Well, it works very similarly, but it's a little bit easier to read. So what we're going to do is we're going to go out to the maybe 1 year. I want something a little clearer. Let's go 3 months, 90 days. Yeah, this is fine. So what this does is it shows you where Bitcoin, see BTC over USDT, Bitcoin, where Bitcoin's price is at and how many liquidations are above it and how many liquidations are below it. The brighter that these bars get, the more liquidations that there are. And you can see this happening in real time. So do you see how when Bitcoin's price was, let's go right here. You see how when Bitcoin's price was right here, there were all these liquidations up here. Like it got really bright up there. And then Bitcoin's price pushed all the way up and smashed into those liquidations right up into it, just right up into it, and liquidated all those traders right here. And then it starts going all the way back down to start taking out these big bright candles right here. That's a very clear representation of Bitcoin coming up, liquidating traders to the upside, coming back down, liquidating traders to the downside. So this is just an easier visual to see where the actual liquidations are in comparison to the price, while also being able to apply technical analysis as well. Okay. So that's what the liquidation heat map does, and it shows you a little bit of a clearer picture. But I personally like to use this because I think this gives me a better understanding of, okay, there's a lot more to the upside than the downside. That's all I really like to know, right? So that's what I like to look at. Now, there's multiple other models. For example, there's Model 2. Model 2 works better than Model 1. As you can see, it's a little bit clearer, a little bit easier. If you go out to maybe like the 30-day, maybe, let's see. Yeah, so you can see like on the 30-day right now, in the short term, there's still a lot of liquidations directly below us. There's a big density of liquidations from the last 30 days, but the actual higher accumulation of liquidations is still higher up here. So density, cumulative liquidations, right? There's a difference. And I'll explain all that later on. You don't really need to know that when you just first get started, but there's a whole bunch of different models that you can use. And what I may do is I may release like a quick pamphlet, like an online pamphlet that you can use to do this. And it's cool because you can look at everything. I mean, you can look at like ETH, for example. You can look at ETH BTC, Pump BTC, ETH USDT. I mean, there's a bunch of stuff you can look at. So that's in general all of the different tools that you can use. But the goal of using these tools, remember, is to be able to see where the majority of liquidations are so that you can then assume where the incentive of the market is at. So I'm going to take 3 more minutes and I'm going to explain how you could then apply that to your trading or your investing. So let's say, for example, I'm looking at Bitcoin. And I notice this. I say, you know what? Bitcoin's price is currently at a major zone of liquidity. Major, guys. I mean, we got resistance, we got support, we got the freaking RSI doing RSI things. Look at this, dude. RSI on the weeklies at 31. I mean, we're low, getting overextensions to the downside. We're getting bullish divergences. And at the same time that we're seeing we're seeing Bitcoin's price try to find support, we see a bunch of liquidations open to the top side, right? So everyone will be liquidated if we go back up. I would do a purchase right here. Why? Because the market has an incentive for the support to hold. It doesn't mean it's going to. It could just not. It could go down, get more short trades available, and then go back up. But eventually it's going to go back up because this market is cyclical, micro and macro. So I would be willing to do a purchase right here, knowing that there is a good chance that Bitcoin tries to go back up to capture some of those liquidations, maybe before continuing downward. So I'd probably maybe open up a swing trade here. Little purchase there, little sell there, trying to act like a fund or a market maker, trying to catch a spread, right? Or for example, let's say Bitcoin's price is going up. It made this move. Look at this. So Bitcoin's price came down here. It back tested this previous zone of resistance and flipped it into support and used it to push upwards. And as Bitcoin's price was pushing upwards, it starts to get stuck below this 1.272 Fibonacci extension zone. It gets stuck right here for months at this resistance zone. Well, as this is happening, I notice that a bunch of long traders are still betting that the market's going to go up. They're still betting that it's going to go up. And so everyone will be liquidated if Bitcoin goes down. Guess what? I'm out. I'm selling. And that's the reason why I did take profits up here. That exact thing happened. Matter of fact, if we go to my Bitcoin buy sell bubble sheet, which should be one of these. Give me 1 second. I don't know if it's this one. Yeah, here you go. So look at the all-time high. That's the reason why I was doing huge sales here, huge sales here, huge sales here. You guys are about to hear from a guy named, I think Lewis is coming. You guys are about to hear from a guy named Lewis. Lewis also got out right here because of these sorts of things. Now, Lewis's reasoning was different, but you can catch tops and you can catch bottoms. You'll never perfectly time them and never try to. It's impossible, but you get the point. You can use liquidations as a tool to have a better edge in the market. And so that's what I got for you guys today. And the truth is that it does go deeper than that. There is more than that. It goes a little bit further. I get a little bit, hey, what's that word where somebody is, it's not superstitious. Conspiracy theory. Yeah, like I get a little bit conspiracy theorist, but we're going to save that for another day, okay? But please let me know if you found this valuable. Because again, I know I could do a big presentation, but sometimes I feel the true value is just talking to you guys and gals. And hopefully you found it valuable. If you did like it, let's put a 7 in the chat. I like 7. Let's put a 7 in the chat. If you understand now what liquidations are, how they work, who benefits from them, how you can use them, how you can, if all that is true, put a 7 in the chat. I genuinely would appreciate it. Genuinely would appreciate it. And if you could smash a quick like, that would be super, that was cool. That would be super appreciative as well. Now, the next thing that we're going to do is we're going to go into a market roundtable. I got 1, 2, 3, 4, 5, 6, 7, 8 M's on my bank account. I have 5 or 6 coaches with me that I'm going to bring on, and we're going to do a roundtable. We're going to talk about the market. We're going to talk about what's going on. We're going to talk about all that sort of stuff. But before we do that, I just want to remind you guys, this is not a normal live stream happening here on the YouTube channel. This is a public version of Super Sunday, which is something that we do every week, only available in the crypto school. We're probably not going to do a public version again for months. So if you want more of this sort of stuff on a weekly basis, check out the crypto school. It's going to be linked down below. Feel free. Guys, when you join, we have an entire beginner course which teaches you what crypto is and how it works. Me and Lewis teamed up to create an investment and trading course where you can learn how to become an investor and a trader. There's a Discord server where you can get insights from me and many other coaches. There's trades going on. There's a community that's winning. There's so much, and it's all available down below. You can learn more. The link is the only link in the description, or if you're watching this on X, it's the link in my bio. Okay, head to the link in my bio, find the crypto school, and this is where we do this every single week. Feel free to check it out. But without further ado, baby, let's go ahead and let's move on into the round table. Welcome in, my friends. Happy to see you. I think we got everybody in here. I'm not missing anyone. All right, what's up, everybody? Happy to see you.
What's up, Tyler?
Hey, guys.
Hey, guys.
All righty. So, look, it's been a crazy week. It's been a crazy week. But we're going to get into that. Let me actually introduce everyone first, because I know you guys may not have met these fellas yet. I think we all have the same orientation. I think you guys can see the exact same thing that I can see. So there's going to be a fellow with a beard. That's Lewis. Lewis is one of the best analysts that I know, one of the best analysts that I've met. Funnily enough, Lewis was able to fully exit his crypto position right around the top. I made a video with him recently. Feel free to check him out. There's also a fellow with a setup in his background that's black and gold. It looks better than mine, and I'm a little bit jealous of it. His name's Keith. That's Crypto Bullseye. He has a YouTube channel himself. He's also an analyst. Below him, there's a fella named Frank with the purple background. Frank is one of the guys that I've known in this market for the longest. Frank has a very, very good tendency to just pay attention very well to narratives, niches, and communities, which I think is an invaluable asset. Under him, there's a fish, the only fish in the room, I think. That's Leisure Fish. That's our boy. Fish has been, I would say Fish has probably been one of the most improved analysts and traders I've ever met before, especially over the last couple of years. I go to him with a lot of questions, and I think you guys are going to find his input valuable. And then we have our guy, Manny, in the bottom left. He is another analyst as well that we have over in the crypto school, constantly providing insights to the market. And today we're going to talk about what we're seeing. So you're going to get some real value. I'm going to take a bit of a back seat. I'm going to let the fellas do their thing. And yeah, so I guess the best thing that we can do, kind of just to kick off this roundtable, is what's been going on. You know, kind of just talk about what's going on. The market right now is not looking good. I can pop up a quick chart on the screen as well. I think we've all seen this real quick. I'll show everyone. We've all seen it, right? We've all seen that. It ain't ugly. It ain't good. So I guess let's just kind of start off with how are y'all feeling? And Lewis, let's start with you. Kind of, was this expected? What's happening? Let's start there.
Yeah, so obviously it's been a very boring day in the markets today. So we've had Bitcoin go to new lows. I actually did talk about it, to be fair, Saturday morning in my video, which is going pretty insane, because I talked about how it's Saturday now and you got TradFi markets closed. So anyone with long exposure in gold, stocks, all of those assets, what I've often noticed for some years now is that, if people think we're going to open out on Sunday on the CME Open like lower, and they think there's going to be further selling, the only asset open right now is Bitcoin and crypto. So it takes the brunt of a lot of selling, typically on a Saturday like we're seeing today. And it doesn't happen often, but these things do happen sometimes. I did talk about, Saturday we could see new lows today, and that's just one of those days where it's played out pretty much exactly to the T. And of course, we're breaking down. So anyone who accumulated between 80K and 97K in that consolidation, those longs now have to unwind. We're seeing, obviously, any of those bad long positions are going to get washed out in this market. Those who are over leveraged, as Tyler kind of talked about in that mini lesson at the beginning, this is what happens to those who are on the bad side of leverage and don't have their positions kind of protected. So yeah, obviously crazy week this week. It's been catalyzed by gold, silver having an absolute collapse essentially. And that's something we've never seen before. We've never seen what happens to the rest of the markets when gold actually goes into more of a bearish structure, because it's just been bullish for years and years and years. So we've never seen it. And what happened is leverage built up so much in those wider markets, and the reactions in Bitcoin has been very weak comparatively. Whereas, you got stocks still at all-time highs, at least from the Friday close. You got Bitcoin really relatively weak that I was highlighting on its downtrend while gold was kind of collapsing. And you're seeing that weakness just really continue. And if I've got one simple advice, it's just the markets have been going down. So until it stops going down, it's not going to go up. And I know that sounds so basic, but like so many traders and investors, they get that wrong, and they're just like, why is it going down? What's the news? What's the FUD? And it's like, it's going down because it's going down. It's literally as simple as that. And until we start to see some market structure breaks, some bullish reversal signs, price action wise, then we can say maybe it's going up. But yeah, bit of a long one there. I'll let you guys kind of take over as well.
Oh, yeah, I think that's great. And I think it's just that cascade. That cascade happens and it sucks. And Bullseye, this is something that I want to bring you in on, because one reason why I also think that the pullback is escalating right now is because I think people realize that the precious metals rotation that they were looking for isn't coming. So, one thing that I've gotten so much crap for the last couple of weeks is I've told people I don't think anyone's just going to sell their gold and silver and buy crypto with that money. I just don't see, I don't know. We've just not seen that before. It's different profiles of people, right? And so I got a lot of crap for it. And a lot of people thought that the second that gold and silver slowed down, that they would sell off and the money would flow into Bitcoin and Bitcoin would outperform them. And it didn't happen. Do you think that's having an impact on the market right now that's causing the pullback to kind of get a little bit worse right now? Because people are like, the one thing people were kind of hanging on to just isn't impacting the market?
Yeah, I do tend to agree, to be honest with you. I think that, firstly, Lewis, yeah, I've seen the silver and gold chart absolutely battered. And one thing that the people are saying is people are going to move out of the metal trade into certain assets, into different assets. And I completely agree with you, Tyler. I don't think that people are going to be going into crypto, specifically outside of Bitcoin, from metals. I think it is kind of a different kind of category class. So I'm thinking, so far as the gold and silver crash is concerned, it did have an impact on Bitcoin. I don't think that money is going to go into the crypto market. I think the key is Bitcoin dropped a significant level, which was 84,000, which was the structure that we've had for 2 months. And on the back of that, you lose that and you get a cascade of stop losses that go to the downside. And like Lewis mentioned, that's just going to continue to go down until it does stop going down. But the two key areas that I've got that I'm looking at right now, it's the 84,000 mark, which is going to bring us back into structure, which is, we're at 77 now. So that's difficult to actually get back to that level. And then the 74,500 mark, which was the previous macro high or low. So those are the two levels that I'm looking for. I don't think that metals are going to actually rotate into cryptocurrency. I think that we need certain things like lower interest rates. We need certain things like stimulus. We need certain things like confidence in the market. And I think that's not going to happen in the next couple of months. So it's going to be interesting to see. We might get a pump, we might not get a pump, but we haven't got any directional bias to look at now. So it's just wait and see.
Yeah, and that makes a lot of sense. And yeah, I think that narrative kind of it'll kind of put a little pain on the market going forward. And I guess like the question that everybody has is, does the market feel like it's bottoming a little bit? Like, could we actually find a bottom here? Maybe even from a technical perspective. So, Manny, I'd like to kind of ask you. I know you spend a lot of time studying charts, and that's where you kind of your specialty would be at. So, let's focus on Bitcoin specifically for now, and we'll pivot to alts eventually. When you look at the Bitcoin chart right now, does this kind of feel like the beginning of a bigger crash, or is there a world in which we do try to find a bottom somewhere around where we are now?
I think there is a good chance, that we'll find a bottom on near 75K support, because, this is one of the key levels. Of course, 80K is what we have seen in last week and before week. I mean, maybe it was a kind of support, but the way how, it is breaking down all the key technical support levels, probably, everyone knows, right now it is in bearish. We really want to see, some kind of, reversal, or, at least a structural breakup, to go further, positive side. Otherwise, as of now, it is still in the bearish mode, but maybe it can find a support at the current level 75K, which is important. If not this, I see, next level is somewhere around 65K. So that's what, I think.
Okay, sweet. And yeah, I think, Manny, I also saw a chart that you posted that I liked. So we'll share that in the school later on, and just highlight where those levels are. So I think I'm trying to think about, because there's so many things that just happen. And I don't want to break away from crypto too long, but I can't help but bring up what happened with silver. Because, was anyone here expecting a 30% collapse on silver? Like
yes.
That? Who said yes? Who was that?
Me.
Really?
I think it's normal. Like you yourselves just said, with having so much longs on silver, everybody was longing it. They're not going to let the casino isn't going to let everyone win. And with a 300% gain, I think a 30% correction isn't that weird. And I saw a comment in there, gold is going to be up to 5K tomorrow again. I'm not sure about it being up tomorrow, but I'm positive it'll return.
And it's interesting because it starts to make you wonder, do the assets that previously were classified as hedges, right? Like, dude, gold and silver was never really considered like an asset that you can make a 400% gain on. You know what I mean? Like that fast, right? It's always kind of more of a hedge. Do these sorts of things start to get impacted by leverage so much that you start to see bigger crashes and capitulations across different asset classes that you've never really seen before? I start to question that, because if that is the case, how does that change the landscape and the risk profiles that like these hedge funds and stuff have? I don't know. I think it's interesting. But with that, I want to ask anyone who trades it or anyone who looks at it, when you look at a silver, which just pulled back 30%, or a gold that's kind of cooled off, are we feeling like this is top of the market sort of esque pullback for precious metals? Or is this just a blip in the moment, probably recovering and maybe try to correct from here? How do y'all feel about this? And then we'll go back to crypto.
If I can take it real quickly, I think a lot of people are sleeping on the fact that there was a bank that collapsed on Friday. I think there's so much money starting to looking for exit plans. Like I've said it before, the Epstein files, I'll just briefly mention it. I think it's going to have bigger repercussions eventually. But pair that with the whole world situation, Iran, Ukraine still hasn't settled, Venezuela, oil, is it going to work out or not? There's so much things moving right now in the world where there's so much uncertainty, even for bigger institutions. They're going to try to find an alternative, and pair that with systemic shortages of like silver, copper being tipped as the next one, even aluminum, uranium. All these materials are going to have massive shortages into 2030, 2040. And I think positioning yourself right now for those markets in the future will be the move of a lifetime. That's how I view it, at least.
Yeah, that makes sense. Anybody else? Because Fish, do you do anything with precious metals?
No, more just like short-term scalps with them, just because silver moves so violent right now. I'm a long-term holder of silver, but I'm not looking for any swing trades or anything on it. It's too volatile right now for me.
Got you. And with your long-term positions of silver, have you done anything really with them, or is it more just you're still just holding them, waiting, seeing, long-term stuff?
So The thing about holding physical silver, you can find out when it pumps 300% and it's at the top, nobody's buying it. So I did go to sell, and it was a nightmare, to tell you the truth. So it's back in the safe. We'll let things mellow out a little bit and find a better time to sell. But people aren't trying to buy at the tops. Those guys are, they're smart.
Right. That's such an interesting thought. And I'm almost wondering if it's a good thing or a bad thing for precious metals holders, right? So it's like the ability to actually sell it. Like you can't just button mash sell something. Like you actually have to sell it, like on a market or in a market or in some capacity. So I feel like that would stop massive sell pressure from happening if no one's just willing to buy it. But at the same time, you can't really capitalize on it like as easily. That's an interesting thought that I've not thought of. So I guess as a silver holder, Fish, kind of what do you do in that scenario? Is it just like, well, I'll just keep it and just hope I can sell it one day? Or
it was a problem that I didn't expect to have. For some reason, I didn't think about it. You're buying silver under $20. You're not thinking, oh no, I'm never going to be able to sell it. It runs to 120 and it's like, well, okay, now what? So now the plan is put it back where it was, let the markets digest, chill out a little bit, let the refineries, get back to normal business. Maybe I didn't sell at the very top because I just literally couldn't, but there's something in there to be made still. So yeah. I'm not really stressed on it, but yeah, it's a problem I didn't expect to have.
Yeah.
Something to think about.
Yeah, that makes sense. So let's kind of pivot back to crypto. I know I venture off sometimes. So whenever it comes to the crypto market, let's talk about the state of the market. And Lewis, I want to direct this one to you because I know that you probably keep the closest grasp on things. Guys, if you don't know, Lewis does have a channel called Crypto Coach. He posts every morning big, great analysis videos on the market. I hate to hit you with the question that we all despise of where do you think we go from here? But I can't help it. I can't help it. I guess I'm kind of curious on your perspective of you're looking at this market. You're trying to figure out what you think comes next. Where's your bias lean? That's the real way that I want to word it.
Yeah, I mean, I've been thinking of a few things just on this call. So I've been thinking about really the biggest rally since 60K was mainly catalyzed by Trump coming into presidency. So like I'm watching the candle from November the 4th. Like maybe the game is to retrace below that. I'm not sure. If that's where the rally started and people seem to think that maybe he's not sticking to his promises. You see crypto bills aren't going through. You see strategic Bitcoin reserve never actually came into effect. Then, maybe that means price needs to go below that, all else being equal. But then at the same time, if price doesn't go below there, that shows you that, there's new demand, and that's showing demand despite, the fundamentals behind it being the same. So, I don't really know where price is going to go, obviously, but I'm just thinking about that maybe as a scenario. I'm also looking at coins like Solana and ETH. Sometimes I do this even just to kind of think about where Bitcoin can go. I think about the game theory behind it. And I look at something like Solana and I see it's been bouncing off that $100 level for like how many times. I think it's pretty ridiculous just how many times it's come into that level and bounced. And the more times a level gets revisited, the weaker it gets, right? Because if it's such a great buy and it's such a great steal at $100, it wouldn't keep coming back to there every single other week and other month, right? So the reason I sometimes look at charts like that to kind of give me a gauge of where could Bitcoin go, it's like, because all the markets are correlated. If Sol's going to break 100, which, that would be my assumption based on that, since it's tested so many times, I don't see why 100 should hold and be the peak or bottom. And Bitcoin's at 77.7K as I'm recording this right now, then, maybe Bitcoin does need to have a little bit more of a dip just to flush out some of the other coins just from that correlation perspective, just because I don't think the peak or bottom for Solana right now is at 102.91, for example. I do think it's probably more likely to break that. So, again, I don't know where the markets are going to go, always just going to react to what it's doing. But those two things have me thinking a little bit that, potentially we could go lower. But I think you've got that low from the tariffs on April the 7th at 73.7K. Like theoretically, as long as that holds, Bitcoin could potentially start recovering here. But, who knows? It could continue cascading down, as I said. And I think if you lose that level, that's when you're more likely to actually head into maybe the high 60s. And that's when you can see what I talked about with Solana, that breaking down. That's when you come to where the kind of presidency rally started. And that's where, a lot of the people who just bet on Bitcoin because Trump became president, if we're below that price, then if they didn't take profit and sell their positions, then they're wrong. And that's when you start really bleeding out the people, because if everyone who kind of betted on this rally is now in the red, that's when you start getting in your proper depression, capitulation zones. And that kind of adds context to me for that being a really good area where price can really reset. So, but of course, if that doesn't happen, then it gives you a different sign, as I said. If it doesn't happen, then it's a show of strength. So, I guess maybe that answers your question.
Yeah. No, totally. And it kind of aligns with my general thesis because, everybody wants us to say, where's Bitcoin going and what should I do right now, right? So I always will try to prod that question out of some of you. So I have a question for everyone. I'm going to start with answering it first. But my question is, what would you be doing right now if you're just a crypto holder? Because that's what everyone watching wants to know. Like, what's the best thing to do right now? And the truth is that the crypto school is not responsible for any financial advice that may be provided on this content. It is not financial advice. It is simply just considered a general conversation between some friends that are talking about the world of cryptocurrency. Anyway, I personally, as a crypto holder, I think that we're entering into that, yes, this is a good time to buy phase. Now, does that mean that I think Bitcoin's just going to go straight up from here? No. The truth is that if I show this chart real quick, and I'll try to pop it up on the screen really quickly, like, when I show this, that's weird. I didn't know we could all be on here. When I show this chart, the truth is that this is a big decision-making zone. I mean, we're sat directly at a massive low. I mean, while you're above this low, your structure is still intact. It's an ugly structure, right? We're talking ugly structure here, but your structure is still intact. You're setting your higher highs, you're setting your higher lows. But if you break through this low, things could really start to open up towards the downside. And kind of like we've talked about before, those liquidations, man, they can cascade you down into the 50s or the 60s faster than you realize. So we absolutely can go lower, and there's reason to believe that might happen. But the truth is that I still think even if that is the case, we're entering into that decent time to buy zone. For example, let me give you an example. When I look at the previous bear market, which of course lasted from right here to right here, I would say that this was the decent time to buy zone. I think once you get to like that second half of the fall, you're now in that, because at any given point, you could start to rally. We could have started to try to rally here. We could have started to try to rally here. Then we did start to rally there. And so, yeah, even if you were buying at 24K, do you actually regret it? No, of course not. Right? Of course not. And so I think we're entering into this portion of this market. And best case scenario is that this part of that just doesn't happen and we rally. I'm just not quite sure if that's possible, right? But my whole point of what I'm going to say is that, yeah, I think we're actually starting to enter into the accumulation area. But I wouldn't be doing big buys because there is still incentive for this market to continue downwards over the long term, right? So some purchases here, yes. Going all in here, no. That's kind of where I am. That applies to not only just Bitcoin, that actually applies to altcoins now. I think alts are starting to enter into some decent territory. Is $100 going to hold? I don't know, right? Lewis seems a little skeptical. I feel a little bit skeptical. This structure is really ugly. It might not. But even if it doesn't, I don't think we go down 80% from here, personally. And so, yeah, sure. If this is what Solana wants to do, hypothetically, yeah, I'd say we're in a decent time to buy. I wouldn't be going all in, but yeah, sure. Some small purchases here, but being understanding, it can get worse from here. So my answer to the question of should we buy right now is yes, but small. That's what I would do. Yes, but small. I wouldn't go all in, but I absolutely think that we're entering into a decent time. So that's what I think. And I want to go around the table. Guys, how are you? Ooh, I just cut him out. There we go. Guys, how are you guys feeling? I guess we'll start with kind of Lewis. And I know, Lewis, I want you to think about this more as a position of someone who just holds crypto, not a big trader, not none of that, just general person. Are we in a decent time to be doing some accumulating, or is it more of a sell situation or a do nothing situation? Which one would you lean towards out of those three?
Yeah, definitely not a sell situation at all. That's very clear to me, because we are so much up far off the highs. I haven't been doing some buying on the long-term portfolio. So I think Bitcoin's at 77K. It was at all-time high, 126K. The lower you go, the more billionaires, multi-billionaires who will literally start looking at Bitcoin like, oh, it's 40% back to all-time highs. Oh, it's 50%. Oh, it's 60% back to all-time highs. That's worth a trade, worth a bet. So you're kind of getting into that risk to reward zone where you got to think about people who have more money than you and what they're going to be thinking. So is it a good time to start doing some buying? I always think so on Bitcoin. Personally, I wouldn't be investing in any altcoins, but that's just my strategy and my kind of long-term thesis for accumulating assets. I stick to Bitcoin, just laser focused. I don't want to kind of spread my attention too thin. So for me, Bitcoin's always a good time to buy, especially when you're way down from all-time highs. So yeah, I mean, you just got to have a long-term plan. That's the main thing.
Totally. Keith, how you feeling?
Yeah, I mean, I think from a spot perspective, it is probably a good time to start scaling in position, certainly on Bitcoin and some of the higher cap altcoins as well. I mean, Lewis mentioned 125,000. We're sat now at 77,000. So that's way down. That's way down in comparison to where we were before. So if you were buying at 125,000, it's a lot cheaper at 76,000 than what it was back then. So now is a good time to buy in comparison to then. But it's all about what happens if it goes lower. Have you got enough exit? Have you got enough capital to start building on your position at these lower levels? So, I mean, you mentioned Solana. That looks quite good to me. Ethereum looks pretty good to me. And there was a few other altcoins that I was looking at as well, which I can't think off the top of my head. But some of the blue chips are looking really good. I mean, something that I've been looking at for a while now, and these things have been absolutely annihilated whilst the network growth's been constantly developing, which is the big boys Cardano and AVAX, which are not actually big boys anymore now. And they've been spattered so much during the bear market. And it is further down the risk curve now. They are higher risk in comparison to things like Ethereum and things like Solana. But they look interesting to me from a small allocation of our portfolio to start scaling into those.
Yeah, that makes sense. Manny, how you feeling? You think this is a good time to buy, maybe time to sell, time to hold? What you leaning towards?
Yeah, from a long-term portfolio perspective, yeah, it's definitely giving opportunity, to scale in, and then maybe, you start looking at just adding it. But from the macro perspective, yeah, there are a lot of things, we have been talking about the liquidity in the market. Now if we see the latest, the nomination from Trump in terms of the Fed chair. So because, the Kevin Walsh, normally, he's more hawkish. So from that perspective, maybe, the liquidity again, there is, expectation of, Fed rate cuts is coming down. Maybe the liquidity may not be there. Maybe that is one of the primary reason, for this shortfall that happened in the broader risk assets in the gold, silver, and other precious metals, along with the Bitcoin. So currently, that needs to be settled down. Although it is like, giving good opportunity once, you see that liquidity, coming into the market, any kind of, the possibility of rate cuts, maybe that is, something, it will give us a better opportunity to add further.
Yeah, totally. Okay. And then we'll do Fish and then Frank.
Yeah, so I DCA weekly. What I did as of yesterday was I doubled my DCA. So I just keep all my emotions out of it. It doesn't matter if it goes down, I'll more than likely push up my DCA again, and just keep doing that until it's time to stop.
I love that. And sometimes that's just the best thing to do. Like when all this craziness is going on, it's just like, you know what? I'm not getting involved. I'm just going to buy every Wednesday and call it a day until this stops. And I think that's great because I do think the market is incentivized to go up over time. So I think that's obviously a winning strategy. And Frank, kind of curious to hear your thoughts, especially with altcoins.
All right. So yeah, my name is Investing Frankly. So I look purely as an investment. And when Bitcoin was crashing, I called it in the Discord as well. I just said like Bitcoin's basically at a 50% discount from its all-time high. So 100% I'm buying. I bought Bitcoin, I bought Ethereum, I bought Solana, I bought some Sebek, I bought some Luna Classic, and Luna actually quite recovered. And it's like it's down overall, but it's basically above the level before Bitcoin crashed. So to me, I'm basically already in profit in that. And when these flash crashes happen, that's when you need to strike as an investor. To me, it makes perfect sense to do that. And try to get the bargains while they are there, basically.
Yeah, everybody wishes they had cheaper, lower average costs until they have the opportunity to lower their average cost, right? So cool. Well, look, I think that kind of covers the entire market. We've covered silvers, gold, crypto, alts, everything really. And look, what we'll do now is we're just going to open up the chat I'm sure you guys have a couple questions. We'll take questions for the next 10 minutes. And then from there, we're going to do a giveaway. I'm going to pick 5 of you who are going to all win $25. Stay tuned for that. And then, I think that's going to go ahead and make it a day. So if you have any questions, feel free to leave them in the chat down below. We'll answer them as we go. And don't forget that if you are just joining the live stream, remember, this is not a normal stream. This is Super Sunday, something that we typically will do over in the crypto school, only in the crypto school, for no one else other than the school members to see it. We decided to make it public today because the market sucks and we wanted to give back to you guys, while also showing you a little bit about what we do in the school, if any of you are interested in signing up. And don't forget, all of the links are down below on YouTube and in my X bio if you want to check out the school and learn more from us. There's classes, coaching, live streams, courses, and a ton more. But without further ado, let's go ahead and let's answer some questions. Sure. I think it's because people have no cash left. All right, let's see where we go. What do you think of a supply squeeze? So I would assume you're kind of more talking about the supply of crypto. I don't know. I don't really ever think about supply squeezes all too often. Does anybody here consider exchanges running out of supply and stuff? Is that something that y'all pay attention to?
A little bit, because I've been in contact with like a little bit on the OTC side of things, and I genuinely think these parties just aren't buying if they can't get it OTC. So that's, I posted a comment while we were chatting as well about like ETF inflows. Yeah, it's happening, but most of these buys are still off market. So we're not seeing these big, huge price increases because these companies aren't stupid. They're not going to pay a 20% premium if they can buy it at a discount off market. And so I don't think we're going to see a supply squeeze unless there's a massive catalyst to do so.
Yeah.
And it's not there.
Agreed. I have a question I want to direct to Lewis. Lewis is the guy for this. How do I restart my day trading process? I feel like I got lost and now I just keep losing money. There's no one better to answer this question. So go ahead.
Yeah. So obviously, the more details you can give in that question to how you lost that money is always going to be the best place to start, because step one is figuring out what you've done wrong. And that's like anything in life, not just trading, business. Step one is first identifying, because if you can't identify what you've done wrong, where do you even start, right? So if it was revenge trading, the reason you lost money, if it was not having risk management, not using a stop loss, for example, in all your trades, if it was not sizing your trades correctly so that you lose 1%, 2% of your portfolio per day in any kind of intraday trading session you do, then also you got to identify that. You got to first of all identify what led you to losing more money than I assume you wanted to lose by your kind of question. So that's step one, is to identify what happened. And then step two, kind of once you've done that, is to really just cleanse yourself of your peak net worth, because we've all been there as traders where you lose more money than you want to. And all you can think about, let's say you started with 10K and now you got 3K left. All you can think about is, oh my God, I need to get back to 10K. I need to get back to 10K. I need to get back to 10K. But that is actually a fear-based mindset. And you need to have an abundance-based mindset to be successful in life. And let me tell you why it's a fear-based mindset. Because what you're telling yourself is that you will never be able to essentially get back to 10K. And what you're telling yourself is that in the future, you're not going to have an 100K portfolio, 200K portfolio, 500K portfolio. Because one day, if you do really take day trading seriously, and you do become successful, eventually, that 10K portfolio you burned is going to be your risk per trade. But if you're so caught up in making that money back, trying to get back to 10K, you're literally telling yourself that you don't believe you're going to ever reach that. So you need to get out of that fear-based mindset of, thinking about your net worth, obsessing over it. You got to reset. You got to accept what is gone is gone. Everyone pays a tuition fee in the markets. And look, as I said, if one day that's going to be your risk per trade, you got to remember the feeling you have now may suck, but in 3 years, 4 years time, that will be your risk per trade and you'll laugh at that. So as long as you believe in yourself and you know that one day you're going to reach that, then it's irrational to have the mindset of trying to make that money back if it's going to be your risk per trade one day. So you have to forget about whatever money you lost is, get back on the process, start with dollar trading again with correct risk management or whatever the issue was. Look, I can't fully answer the question because I don't know what led to you losing that money, what mistakes were, but often it is risk management. Let's face it, especially if you lose more than you want to lose, because there should be no excuse to, burn more than 30, 40, 50% of your trading portfolio ever if you are adopting risk management and having breaks where if you lose a certain amount per day, you stop trading, a certain amount per month, you stop trading. All of these rules which stop us from having catastrophic losses, because you can't make it all in a day, but you sure can lose it all in a day.
Yeah. I love that. That was great. And hopefully that's helpful. Like I said, it's really not anyone better to answer that. Also, we'll let you know in the school, we do have a, like it's an entire big thing about developing a strategy that may be the best place to start. It's just kind of cutting back to the basics and restarting from ground up. So feel free to check that out.
Can I add to that real quick, Tyler?
Yeah, please do.
A way to get all this data that Lewis was talking about when you do start trading again is to journal. Keep track of what you're doing. So when somebody like Lewis asks you all those questions, you can actually give them an answer for all of them.
Yeah, totally. You know, it's funny. You ever watch Shark Tank and they'll be like, yeah, well, we lost $300,000 of revenue last year. And Mark Cuban, hate him or love him, he'll say something like, well, where'd it go? And they just say, I don't know. That's always like the most embarrassing thing ever, right? So like those are the sorts of answers you need to have on spot. Like, why did I lose? What did I lose? And how did I lose it? And that'll give you a much better insight into what you actually need to correct to restart from a better foundation. Okay, let's get into a new one. With the majority of the leverage longs already wiped out now, do you think the market makers are now incentivized to push price up to go after the shorts? I'm going to answer this one because it's a simple answer, and it sucks. You're not going to like my answer. Yes, first, yes. But it doesn't mean it has to be right now. And that's something a lot of people get wrong. A lot of people see a lot of upside liquidations and think, oh, well, we have to go up right now because everyone will get liquidated if we go up. Remember, the further down we go, the more liquidations there are available to the upside. So sometimes that trap likes to get set where that'll let it go down, let it go down, let it go down. And then it springs up with volume and intensity to try to capitalize on it. So yeah, eventually I think so. Doesn't mean it has to be right now, though. So please be careful and not just assume that it's going to happen. Okay. Let's jump into some more. How important is it to know who Satoshi Nakamoto is? I personally don't care. It's also funny because this is in caps, and I feel like I'm not trying to make fun of you, Terry, but I feel like you really want to know. So anyway, I'm not going to get into this one. But what do you guys think? Do y'all think it's important?
It'd be nice, but not important.
So
I think there is another comment in there as well. So apparently the founder or founders of Bitcoin have been mentioned in the Epstein files. I'll get rid of my tinfoil hat in a little bit, but I don't know. I think it could have repercussions if it does turn out to be true, but who knows?
That's where I was heading. If all this, this stuff's coming about Epstein and Bitcoin, and like maybe it is important who it is, based off these emails and stuff. It used to not be, but maybe it is now.
Frank, do you think it could be Epstein?
Honestly, who knows? Like, I've looked into it a little bit, and I've purposely not posted about it on Twitter or anything. But honestly, the stuff in there is pretty horrifying. And if it is, and like, let's say he was Satoshi Nakamoto, obviously he can't sell it anymore. So technically that is a better protection. But I do think it will have certain public image issues, and it will force Bitcoin lower if it does turn out to be true. But
yeah, I was going to say that. I genuinely do not think it matters who on earth the person could be. The second people find out, it will cause problems, no matter who it is. There is no right answer or maybe like Keanu Reeves. I'm joking, obviously, it's not him. Like maybe everyone loves him, but there's always, dude, I would honestly hate for that to happen. So I personally don't even think about it. It's kind of like the alien thing. Like if aliens come down, I'll deal with them then.
The way they're trying to swing it is more of he was financing it. He was the one pushing the money to help them in it. It's a whole thing, but not so much he is Satoshi, but he was helping finance all this to happen.
Maybe.
Well, I have one more thing to add to that. I do think like nowadays we all have to do KYCs on almost every single exchange. In the very beginning of crypto, it was the easiest way to launder money instantly.
Yeah. And
I think that fact is overlooked. I think most of the money that went into crypto in the early days was all drugs money and hush money, etc., just illegal payments.
Right. Yeah, agree. If any of you want some Epstein info, Frank's your guy. Frank knows Frank's you know a little too much. But anyway. So all right, next question. With all the ETFs and other type of crypto holdings, wouldn't that have an effect to how far we go down? I think so, yes. So I think the market will have a natural incentive to not dump past certain levels, because it would be just really bad for so many major players that they'll actually battle the market to not let it happen. Because you got to remember, like, a lot of these funds and stuff, they have investors to attest to. Like, there are people they answer to. And if these investments and stuff take shits that are bad enough, they'll lose investments, they'll lose management fees, they'll lose all sorts of stuff. AUM will drop, of course, the natural valuation of their funds. There's a lot of bad things that happens if they lose money on certain assets. And so I think there's a natural incentive for the market to not fall, just because, and to a certain capacity, because so many of these major players would go to battle to make sure it doesn't happen. So I think so. Yeah, I think so. Jump into a next one for one of you guys. With the majority, what are the chances that we are in a bear market since the October 10th crash, and the Tom Lee and Mike Saylor are just pretending that it isn't, expecting no rally until September 26th DCA? Feel free, someone can take that one.
I mean, we've been in a downtrend, and we won't confirm that we're in a bear market until we're actually in a bear market, and that actually hasn't been confirmed yet until we actually break under 74,500. So we'll see how far low we go and whether that confirms with a lower high. I mean, we have had a big lower high, 38.2% rejection from the October high. So yeah, we'll have to wait and see.
Yeah, and people don't seem to understand yet, not talking about you at all, Destin, just people in general. People don't seem to understand the difference between being in a bear market and confirming one. You can be in a bear market without confirming one, and then you confirm it, right? So let's say, for example, if like a bear market's not confirmed until Bitcoin falls below 74K, we could still be in one right now, and then it falls below 74K, and now it's confirmed. So what he's not saying we're not in one. He's just saying, yeah, we might be in one. It's just not confirmed yet. He can't give a direct yes yet, if that makes sense. But only time will tell. Umesh, I will let you know. I did put all the links for the coaches' YouTube channels in the description. All you got to do is give a quick refresh, and then it'll be there for you. A couple more questions, and then we're going to do a giveaway, and then we're going to call it a day. What is a basic trading principle that you need to know that if you were to restart, Stein? What is a basic trading principle that you need to know that if you were to restart, how you would do it? Stein, you're my boy. We're going to reword that one. Type that one again. Given the recent leverage plus and the convergence of geopolitical risk with the hawkish Fed, do you believe we're witnessing a structural breakdown of the traditional 4-year halving cycle? Ooh, one of y'all. Who's taking that one? That's fun. I'll volunteer one. Oh, I crashed. That's on me. All right, Lewis, you got this one.
Yes, so the question is, do we believe we're witnessing a structural breakdown of the 4-year halving cycle? Well, we topped out in Q4 of the final year, just like we did in 2021, 2017, 2030. So it's like, did the 4-year cycle not play out exactly as it was meant to play out and top out exactly when it always tops out? So, I don't put, well, maybe I do put weight on it. I mean, I didn't sell my Bitcoin at 121K because of the 4-year cycle, but, it just happens to be that occurred again. So I don't really understand when people say the 4-year cycle's breaking when it has played out pretty much to the T so far. So yeah, I'm not sure what else to add to that, to be honest. I know I go over that a lot.
Yeah, totally. I love talking about 4-year cycles with Lewis because Lewis hates talking about them, by the way. So this is an interesting one. I saw this one a couple of times. Would y'all long-term investors be willing to talk about the quantum computing threats? If you have a very long horizon plan, wouldn't this be an important variable to think about? Yeah, I think that's fair. I don't really dig super deep into the whole quantum computing thing. To be fair, if I'm going to be 100% honest with you, it's one of those things that I kind of just assume will just figure itself out. How? I don't know. I'm not very technical. I'm not good in that realm. Crypto has outlasted a lot of things that can be threatening. I would say that quantum computing could obviously be one of the most threatening, but one of the beautiful things about crypto is how malleable it is and how, of course, it can bend, it can change, it can adapt, right? And I feel knowing that one of the biggest threats in the world is right around the corner from $1 trillion asset class, I would assume the people who are at the foundational level of it will have an answer for that. What that answer is, I don't know. I just assume it won't just disappear, right? I just don't see that happening. If any of you dig into quantum computing, I'd love to hear your thoughts.
I mean, I don't dig into quantum computing, but I think the one thing that you see is as the technological advancement happens on quantum computing, it's going to happen elsewhere. And if it happens elsewhere, it's going to be integrated. And we see it time and time again. I mean, Bitcoin's changed, other cryptocurrencies have changed as the technology's changed alongside with it. So I don't think it's going to be a case of, bam, we've got a quantum computer, Bitcoin's being hacked. I think that it's going to be a slow progress, and that technology will develop slowly alongside, and then these things will get plugged with time. So I'm not sure whether there's going to be an imminent threat as far as quantum computing is concerned to Bitcoin.
Totally. There we go, Stein. What is a basic trading principle that you'd use if you were to start all over again? What are the key pillars to have? Tyler, I know you can't read for shit. Don't worry. That was not a me problem there, Stein. But anyway, Fish, I'm giving this one to you. What are some basic trading principles that you were to use if you were to start all over again? Just some key pillars, risk management, whatever.
Risk management right off the bat. I think it happens to everybody. You get in, you win big, or you win a few times, and then you turn around and you lose it all. And then you learn about risk management. I would have immediately wanted to, start implementing that in a better way to save more capital to last longer.
Makes sense. Because one of the worst things you can do when you first start is just lose it all. Like, I feel like, Lewis, maybe correct me if I'm wrong, because I haven't been a new guy to this in a while, I guess. But I feel like when you're first getting started, your biggest thing that you should be worried about is just protecting your capital and learning. And it's really hard to learn if you have no capital. And so it's like, focus on your risk management just to make sure that like you actually have something to practice with. And that could even mean just doing demo trades rather than actually trading, just protecting that capital. So yeah, I think obviously risk management would be the most important. And let's do two more. If you had nothing to do for the next 3 months, what would you be waiting to see before? If you had to do nothing for the next 3 months, what would you be waiting to see before acting? I think I'd be waiting for the 3 months to end. I'm not sure about that. I'm not sure I understand that.
I can add to it.
Go ahead, Dan. Yeah, go ahead.
So basically, if you're on the sidelines and you're waiting for a good entry, find moments like we had yesterday when Bitcoin is crashing, when you want to buy maybe a little bit, especially even if you're just starting out. So with the previous question, if you're just starting out, try to find these little moments, these little dips. If you have zero money in crypto, that's the time to maybe start a little position, and you have no risk. If you don't take leverage, I wouldn't if I was just starting. Just buy a little bit, see what happens. Do we drop further? Just buy a little bit more. Never buy everything in one go, by the way.
Yep. 100%. 100%. Okay. Well, I feel like that's good on the questions. And obviously, coaches, I genuinely appreciate all of you for taking the time. I know we've been on for about an hour, so we'll go ahead and wrap up the roundtable in the Q&A section. Guys, do remember a couple of these guys have YouTube channels. So if you did enjoy their content, their thoughts, ideas, if you enjoyed just looking at them, talking to you, Frank, feel free to check out the links down in the description below. I have their links available for you there. Over the next couple minutes, what I'm going to do is do a quick giveaway. I have to figure out what sort of giveaway I'm going to do. I haven't figured it out yet. So we're going to do that. Coaches, feel free to jump off. We appreciate you. And yeah, we'll all talk soon.
Bye, guys.
See you, everybody. All right, folks. So let's do a bit of a giveaway here. Curious to see how we're going to do this. How should we do this? You know what? This is what we're going to do. This is what we're going to do. I'm going to put an email. I'm going to put an email in the bio. And what you're going to do, give me a second. Let me think. What email do I want to use? Yeah, give me 1 sec. We're going to do a giveaway. I'm going to pick 5 of you to win $25. I'm looking for my phone because I want to make sure I can contact you after. You know what? This is what we're going to do. This is going to be easy. If you want to win the giveaway, go to my X. I have an X account. It's Tyler Hill. Just go on YouTube or X and type in Tyler Hill. Send me a DM. You should be able to. Send me a DM, and I want you to tell me what your current plan for the crypto market is right now. Tell me what's your plan. What are you doing? Are you holding? Are you buying? Are you selling? Are you longing? Are you shorting? Are you yield farming? Are you quitting? What are you doing? And I'm going to pick 5 of you who send me your plan to win $25. Cut and dry, super simple. So that link is down below. Feel free to go check that out. Go sue me. If you don't have an X account, make a quick X account. It's $25. It's worth the time. Go do that. It's not a speed thing. I'm just going to pick 5 people who message me sometime today. So feel free to shoot me that message. And all in all, I really hope you guys enjoyed today's Super Sunday. Again, this is something that we only do over in the Crypto School. You saw what we just did, that workshop, that live stream, that Q&A. We do that every week, every single week, 4 times a month, sometimes 5. Every single week over in the Crypto School. It's insane value. And that's just scratching the surface. When you join the Crypto School, guys, you're getting courses, you're getting classes. Let me show you this. I mean, you're getting all of these courses, all of these exclusive classes on developing a trade strategy and much more. You're getting access to the Discord server. You're getting my insights, Connor's, Lewis's fish, Chris, Bulls, so much more. You're getting free content. I mean, let me show you something real quick. Look at this. Over 20 hours worth of content on how to build a strategy. And it's a community that genuinely wins. And you can see, I mean, you think these sorts of things are by accident? No. This community wins because this community is one of the best and the most educated communities that there is. And so if you want to join in and start winning, the link is linked down below. As always, thank you to BTCC. BTCC is a partner of the Crypto School. They fuel it. They help this whole thing happen. So massive shout out to them for always making it happen. So if you are trading, make sure to check out the link to BTCC. That's available there for you. And all in all, again, I really hope you enjoyed today because we really did enjoy it. So thank you all for joining in. I hope you guys have a fantastic week. We are back to the normal content going forward starting tomorrow. So stay tuned for that, and I'll see you all in the next one. Peace out, everybody.